So November 13th, 2025, the market had just been hitting these incredible record highs. And then, bam! It was like someone slammed on the brakes. Hard. And this wasn't just some little dip, It was a massive sell-off that seemed to pop up out of nowhere, and it left everybody scrambling, asking one simple question: what in the world just happened? All right, let's get into it.
And right at the epicenter of this whole market earthquake was the NASDAQ, the tech-heavy index. It plunged a staggering 2.5% in a single day. I mean, that wasn't a warning shot. That was the main event. It was a giant flashing red light telling us that the market's biggest growth engine was in some serious, serious trouble. So, what was the trigger, right? Was it just one thing? Well, here's the thing. The truth is, this wasn't just one problem. Nope. This was a perfect storm, a really rare and dangerous mashup of two huge, totally separate crises that just happened to hit at the exact same moment. And in this explainer, we are going to untangle exactly how they collided.
To really get this, I want you to think of the market as fighting a war on two fronts. So first, we're going to look at what we're calling the economic data blackout, this whole mess caused by a historic government shutdown. Then, we'll turn to the second front, the moment the big AI bubble finally burst. We're going to show you how these two things crashed into each other to create that perfect storm. And then, finally, what it all means to navigate in this, well, this new fog of uncertainty.
Okay, so this is the crucial point to remember. The market wasn't just dealing with one problem. It was two completely different crises hitting at the exact same time. So let's start with the first front of this war.
So, crisis number one was born out of all that political gridlock down in Washington. See, the end of the longest government shutdown in U.S. history, well, it didn't bring relief. Instead, it created this massive information vacuum that left literally everyone, including the Federal Reserve, completely flying blind. And this shutdown lasted a record-breaking 43 days. It finally ended on November 12th, but get this, the solution was just a temporary Band-Aid. The government's only funded until January 30th of next year, which means this whole nightmare could just start all over again in a couple of months. And make no mistake, this wasn't just political theater. This shutdown caused real, actual pain. The Congressional Budget Office estimates it literally sliced 1.5 percentage points off of Q4 GDP growth and caused a permanent loss of $11 billion to the economy. That's economic activity, gone, forever. We are never getting that back.
But as bad as all that was, the direct economic damage, that wasn't even the scariest part. No, the far more dangerous problem was what came next, the complete and total meltdown of the government's ability to give us reliable economic data.
Okay, now look at this slide. This is where you can actually see the system breaking down in real time. The September jobs report, it's delayed, but, it's probably reliable. But for October, a critical failure. The White House itself warned that the jobs and inflation data are, and I'm quoting here, permanently deteriorated and will likely never be published. Why? Because the data collection just didn't happen. The economy was flying completely blind.
And you know who else was flying blind? The Federal Reserve. Fed Chair Jerome Powell came up with this perfect analogy. He said trying to make policy without data is like driving in a fog. I mean, think about it. The Fed's entire job is to manage inflation and employment, and now, suddenly, it had no reliable numbers for either one.
Well, the market reacted to this uncertainty instantly. Just last week, traders were pricing in a 70% chance that the Fed was going to cut interest rates in December. But now, with the Fed totally lost in this fog, that probability collapsed to just 54%. The market realized that when the Fed doesn't know what's going on, it's forced to just pause.
And that set off a huge chain reaction. With the market deciding the Fed wasn't going to cut rates, the yield on the 10-year Treasury bond, which is basically a benchmark for interest rates, it spiked to 4.1%. And what that means is that borrowing gets more expensive for everyone, from people buying houses to giant corporations. It just tightens the financial screws on the entire economy.
Okay, so an economy with no data and a central bank totally in the dark, that's a massive crisis all by itself. But remember, this was a war on two fronts. So now let's turn to the second crisis that was brewing at the exact same time, right in the heart of the tech sector.
So at the exact same moment this whole macro crisis was unfolding, the market's biggest growth driver all year, those high-flying artificial intelligence stocks, they just started to violently sell off. The AI engine that had powered this entire rally, it was suddenly just sputtering out.
It was an absolute tech bloodbath. I mean, look at this. The biggest names in the AI space were getting hammered.
Supermicro, down over 7%. Palantir, Broadcom, and of course the undisputed king of AI, NVIDIA, all saw these massive one-day losses. This was not a small correction. This was a panic.
Now, this sell-off didn't just happen in a vacuum. For months, you could feel this anxiety building just underneath all the AI hype. Investors were looking at these valuations stretched to just eye-watering extremes. Some of these stocks were trading at prices that only made sense in a world with 0% interest rates and endless growth. The whole mood just felt fragile. It was drawing these really scary comparisons to the dot-com bubble back in 2000. All it needed was a spark.
And that is where our two stories collide. That macroeconomic crisis, the data blackout, it wasn't some separate thing from the AI sell-off. It was the pin that finally popped the AI valuation bubble.
So, you've got these rising bond yields from the data blackout on one side, and on the other, you've got this whole sector of incredibly expensive, super jittery AI stocks. Here's exactly how one lit the fuse for the other. Okay, here's the chain reaction. Step 1. The data blackout forces the Fed to slam on the brakes. Step 2. That pause pushes the 10-year Treasury yield up to 4.1%. Now, here is the crucial link. Step 3. That higher risk-free rate you can get from a boring old government bond makes taking a huge risk on a hyper-expensive tech stock look way less appealing. The math literally changes. The valuation just doesn't make sense anymore. And that leads to step 4. The AI bubble pops and the NASDAQ just collapses.
So that's it. That's how the perfect storm came together. The big macro crisis gave the justification and the catalyst for the tech crisis. But the big question now is, what do we do in this new, super uncertain environment?
Well, welcome to what some are calling the vibes-based market. It's an environment where the old rules are kind of broken. Without reliable government stats, all that fundamental analysis is basically paralyzed. We're all being forced to make decisions based less on verified facts and more on, well, sentiment and gut feelings.
So, what are the key takeaways from all this? First, get ready for high volatility. The data we're going to get is going to be confusing and probably untrustworthy for months. Second, quality matters now more than ever. The market is rewarding companies with actual profits, like Cisco, while it's punishing the hype stocks. And finally, that unbreakable link between rising bond yields and falling tech valuations, yeah, it's been laid bare for everyone to see.
Which leaves us with one final and pretty critical question. When the official map of the economy has basically been shredded and we're all just driving in the fog, are our investment decisions really based on analysis anymore? Or are we all just trading based on a vibe?